Hello there. The second part of Lecture Series 16 looks at the quantitative thresholds as set out in IFRS 8 operating segments. An entity shall report separately an operating segment provided it meets any of the following quantitative thresholds. 1. Its reported revenue, including both sales to external customers and inter-segment sales or transfers, is 10% or more of the combined revenue of all operating segments. 2. The absolute amount of its reported profit or loss is 10% or more of the greater of the combined reported profit of all operating segments that did not report a loss and the combined reported loss of all operating segments that reported a loss. 3. Its assets are 10% or more of the combined assets of all operating segments. In this example, the management have identified operating segments based on city of operation, that being London, Paris, Los Angeles, Seoul, and Singapore. The entity shall report separately information of each segment if it exceeds any of the quantitative thresholds as set out in IFRS 8. In this case, that would be either 1. 10% or more of total sales of 1 million, 2. 10% or more in absolute amount, the greater of profit segments of 268,000 and loss segments of 31,000. 3. 10% or more of total assets of 5 million. For the operating segments to be reported separately, they should meet any of the following quantitative thresholds. 1. Total sales of 100,000 or more. 2. For reported profit or loss, the greater in absolute amount is 10% of the profit segments of 26,800 or more. 3. Total assets of 500,000 or more. In this case, London, Los Angeles, and Seoul meet all three quantitative thresholds and shall be reported separately. Although Paris does not meet the reported profit or loss and the total asset thresholds, IFRS 8 only requires one of the thresholds to be met. As Paris does meet the total revenue threshold, it too shall be reported separately. In this example, Singapore does not meet any of the thresholds, thus it shall not be reported separately. However, it may be possible to combine Singapore with other operating segments. It may be possible to combine Singapore with Seoul, as both are in Asia and may have similar economic characteristics and share a majority of the aggregation criteria as mentioned in Part 1 of the lecture series. It is also possible to report Singapore separately if it was a reportable segment in the immediately preceding period and management is of the opinion Singapore is of continuing significance. IFRS 8 requires the total external revenue of reportable segments should represent at least 75% of total external revenue. Thus, given the total external revenue from reportable segments, excluding Singapore, is 818,000, representing more than 93%, it is possible to disclose Singapore in an all other segments category. The final part of Lecture Series 16 will focus on disclosure requirements as set out in IFRS 8 operating segments. Till then, thank you and have a pleasant day.